A lot to talk about in this Trading Justice podcast. I'm joined with my brother Matt. This is Mark from Tackle Trading. Big week in the market, no shortage of analysis, and we are going to break it down for you in a historic week in the market, both on a macro and on a technical level. Set some records this week. We're going to outline what happened and what is going to happen next as far as the possibilities on the subject everybody is talking about right now in markets, the trade policy. So we're going to outline what happened. We're going to talk about why it happened. We're going to talk about the outcomes of what happened next, how they may manifest themselves both from a messaging standpoint and a technical standpoint. And along those technical lines, listen, market might have spooked you this week. You might have some uncertainty. I promise you, moving forward, technical analysis is going to let you know where bottoms are in and when there's potential more price selling pressure where you want to be on that hedging bearish side of the equation. It is going to be the ultimate guide. We have an upcoming big, huge, massive workshop that we call Master Trader. Tell us about it, Matt.
I think while everybody's trying to understand what's going on the tariff side of the equation, hopefully our conversation here today helps people understand it from our perspective. But the immediate second question that a lot of people have right now, especially at the tackle trading community, is when to start the buying process. That's not a fundamental conversation right now. That's technical conversation, and it starts on intraday side of the equation. And so, if you want to learn how to answer the ultimate question of when to start the buying process to pick up high quality stocks in this environment to take advantage of the volatility, well, once again, that's going to be a technical story. And so, come to Master Trader. I'll teach you all about it. It starts Monday at 6 p.m. Eastern Standard Time.
Yeah, listen.
You can register in the link in the description below.
Register for that. If you're a pro member, come join us on that. It's just a very important, essential skill. We'll talk a little bit about the technical conditions we're going to be looking for near the end of the podcast. Matt, I want to start out in this huge, massive week with some charts that truly have candlestick patterns that you don't see every decade, right? The first thing I want to do in this podcast, though, is help everyone understand what happened, not from a big red candle perspective. Everybody can see those on the charts, but understand why the market's reaction was as swift as it was. Because, somebody out there might say, well, that's an overreaction or what. There were reasons why, following the Trump announcement on Liberation Day, the market started selling and basically couldn't catch a bid for 2 straight days. Let's start with, and you did such a fantastic job on the newsletter, by the way, outlining this for our pro members. But let's start about what happened on Liberation Day and spend the time on why the market's reaction was as swift as it was.
I'm sorry, there's not a quick answer to why the market's reaction was swift. That is a deep conversation.
Yeah, well, let's walk through it.
Economic side of the equation that is not a simple conversation. I just want to throw that out there right now. I can't answer the question you just asked me in the next 60 minutes. So I'm just going to kind of talk about kind of the environment a little bit. Obviously, Liberation Day on Wednesday, you can kind of see the candle on Thursday to see the market's reaction, market down historically over the last couple of days. On Wednesday, the market was basically preparing to get the latest trade information coming out of the Trump administration regarding the new trade policy. Liberation Day was very well known to the entire market, and based on the conversation for the previous 45 days in front of Liberation Day, our anticipation was reciprocal tariffs with negotiation on the reciprocal tariff side of the equation. But the reciprocal tariffs, as we talked about last week, both of you and I felt that it was going to be applied universally, and then the negotiation would occur postscript after they came out with their opening basic trade policy. Well, we got that, but the problem for a lot of people in the market was it wasn't the conversation that we were told was occurring. What we saw was something vastly different in terms of the overall reciprocal tariff announcement. We did get universal tariffs and then some. And so in general, we basically got the tariff update here this week and the market responded very negatively because nobody in the market was prepared to have that conversation. And what I mean by that is it wasn't a tariff, it was not a reciprocal tariff announcement. It was a trade policy targeting trade deficits. And that's vastly different. And it was shocking, quite frankly. It was shocking.
No, and you know,
everybody.
I would just want to interject here, like, you know, like you and I, we both deep reading a ton of news, and both of us kind of had the same reaction that, you know, all of the big banks, all of the analysis, you know, leading into it was, here's the scenario, here's the scenario, here's the scenario. Nobody had a scenario where the overall tariff rate would be as high as it ended up being. Like, and so this was, you know, how you have like an unemployment report. The average analyst estimate is 200,000 jobs, right? And, you know, and all of a sudden it's the equivalent if the jobs report had a negative 300,000 print. That's how I looked at it. It was that shocking.
I disagree with you. I disagree with you. It's like if we were expecting a labor market print, but we got PMI numbers instead. I don't know how, like, that's the analogy. Like, we didn't, it was a totality of a trade policy conversation, which takes into account many, many, many things. And when you're talking about expectations versus what actually transpired, you have to kind of look at how the Trump administration went to, and even a kind of accounting for how to determine the trade policy and the tariff. And so again, to kind of go on that first point, why did the market respond so aggressively? Mark, the market was very prepared for a tariff conversation. Very,
absolutely, 100%
for a tariff conversation. Everybody was on pins and needles. We were breaking this down for the last 6 weeks, trying to understand exactly, you know, what reciprocal tariff meant. And the Trump administration had come out and talked about exactly, we're looking at import costs, we're looking at the reciprocal tariff, but at no point did we get told that this was a deficit targeting. And so the market,
it was not even leaked.
There was no conversation.
Nobody had even speculated.
And again, if you're thinking reciprocal tariffs on the EU, you're probably thinking, all right, 3 to 10% in that range, 10 on the top, 3 on the low. We got 20. When you're thinking about Vietnam, for example, Vietnam, before the tariff announcement came out and dropped their tariffs to 0 on US based imports. Well, we tariffed them at 46%. And so again, I'm not coming out with an opinion on the algorithm. I'm just saying, when you're trying to understand the market response, the initial shock of the market response, it's because what we got on Wednesday had really a vastly different conversation than what was transpiring for the first 6 weeks. And so whenever the market gets shocked like that in an uncertainty environment, and the uncertainty does not become certain, the path of least resistance is down. It is a sell first, ask questions later environment. And I don't care if it's a standardized economic report or a major trade policy announcement.
I mean, we see these type of market
uncertainty, and the event does not create certainty, there's going to be selling pressure, because everybody for 6 weeks wanted nothing but certainty, and they got nothing but it.
And you used a good preparation for our pro members in the Traders Lounge. You said, treat this like an earnings event for the market, for your portfolio. That helped a lot of us, you know, that type of mentality. And in earnings, right, sometimes we get these kind of, holy cow, nobody saw that coming, an announcement, right? Very rarely do we see that on a broad macro level, where like there was 0 hints of this. Like there wasn't a trial balloon floated by the administration in February that this could be the way that they calculate it. Just true shock and awe event. Shock and awe event. Now, Matt, we did see follow through on Friday, right? So there's the initial shock of the event. What contributed to that continuation? Because had you just gapped down on Thursday, right? Gap down, and here we are, and maybe you stick support. It's a different conversation of, all right, be prepared when you break support to to sell more. But we just had a pure capitulation type day where we saw selling and everything. What contributed to that on Friday? I mean, on Friday.
Well, the lack of a bid on Thursday, I would say, is the number one reason what created the causation of the volatility. But you don't have a bid on Thursday and you get no alleviation event between Thursday and Friday, you're going to get a gap down. There's just no doubt about that. But when you actually think about causation, it's not too difficult to understand. You had the opening salvo of the negotiation on Wednesday, and we went high. We went hard. We went high. Highest effective tariff rate coming proposal. There's scenarios where this does not go through, and we can talk about those here in a second. I think
and we're going to talk about those in a minute.
I think that's even a more important part of the conversation than understanding what transpired last week. But when you look at kind of the Thursday reaction, shock, a shock response, I would say, but it wasn't totality of capitulation on Thursday. On Friday, it was. Everything went down on Friday outside of a couple stocks like Nike and Lulu that had some sensitivity to some headlines coming out on the tariff negotiation. And so on Friday, there were two events that occurred on Friday. One occurred with the Chinese, who came back out and retaliated. 34% tariff on U.S. imports.
And that news broke a couple hours before the market opened. It was
about 6 a.m. It was about 6 a.m.
Like China timed their response in a calculated manner, right?
And they're going to continue to do this. Like we don't control this conversation completely. Other international nations are going to do what they do. But China came out on Friday morning and said, we're going to do reciprocal tariffs. They obviously targeted sensitivity out of US based exports, but it was also on Friday when Jay Powell spoke, and he did not give a reason for the bulls to step up. He just did not give a reason. And everybody was kind of on pins and needles waiting for Jay Powell to speak on Friday, because you knew the central bank was going to get asked on if they're going to respond to this. Because, Mark, we saw horrific pricing that reminds me of only subprime and pandemic pricing. I don't think there's other case studies. I think you got to go 2020,
as an
2008, and I think you got to go 1987 as the case studies here.
As an options trader, because I deal almost exclusively in options, like the bid-ask spread on even the most liquid of instruments was very suspect.
Just telling you not to trade options.
Yeah, but adjusting, right? But it was a very the liquidity problems were present.
But Jay Powell did not, when he was asked basically on, the tariff situation, he basically stated, well, we kind of feel like we're pretty good with where policy currently is. They're not looking to do anything despite the volatility, despite the concern. The Fed is like, what do you want us to do? We're going to see elevated inflation and lower growth. And if you're going to see elevated inflation and lower growth, the Fed's painted itself into a corner. Trump slammed the door shut, and we can sit there and complain all day about the Fed doing this or the Fed not doing this. Truly, I wonder what is the Fed supposed to do if their dual mandate is, number one, maximize the labor market, i.e. growth, but without causing inflation to get out of control. I'm trying to understand from the Fed's perspective what they're supposed to do in an environment where we are legitimately staring down the barrel of stagflation plus.
And that leads us into this conversation of what happens next, both from multiple avenues, because there's a lot of different ways this can play out from here. Now, before we get into the specifics of some scenarios that I'm going to lay out for you, can we both agree that we're likely to see big green, big red candles in the coming trading sessions, right? Probably not a lot of tight range dojis.
Listen, we went 60 points last week in 3 days. We could do another 60 in 3 days. This is the environment. I saw Jim Cramer, and again, Jim Cramer's somebody I have a tendency to disagree with it sometimes. I felt like he's been spot on recently. But Jim Cramer came out and basically said, if there is not some degree of improvement on this current situation, meaning improvement on the negotiation, Trump pivots a little bit, he could see a 1987 Black Monday type situation. And I don't think we should scoff at that.
No, you cannot, right?
There are scenarios that could play out in the short term that we see even more volatility shock than what we have already seen. And so I think it's important to understand that's the environment. And so, yeah, you could see the market down at 475. You could see the market, because you're not at a support level, Mark. Any negative news or follow through, like, you don't start getting into any degree. And I talked about this in the newsletter a lot, but you don't get into any major support, how I would define as major support, like structural support, until you get into the mid 460s, 470s. And so you got another 30 points down potentially before you get into anything. And in the current environment, that's an intraday side of the equation. And so that's the risk to the downside. Obviously, on the top side, like, I could see some scenarios with some capitulation coming over the weekend that you see the market screaming back up to 550 here.
It's funny. You just painted a 470 to 550 range, right? Like that's the environment we're in.
The market moved 60 points last week. Saying it can move another 30 or 45 is not abnormal. Like, yeah, these are very sensitive environments where the entire world is focused on one single conversation out of one single administration that in one single action can truly fundamentally shift the balance of every single part of this conversation. And so it's obviously going to be extremely sensitive.
Yeah, and before we get into these scenarios, I want to spend 1 minute, maybe 90 seconds is all, just talking about how when volatility strikes here, this just isn't an equity conversation. This volatility bleeds over into all asset classes. And so when you go and look at silver or copper or crude oil, even gold, right, you are seeing in asset classes everywhere just the principle of, when market volatility hits, it strikes everything. So be aware of that. In true volatility, and you can go look at COVID charts to see an example, there really are no safe havens until the volatility subsides,
Well, I get what you're saying. I would just ask if you would explain what you're talking about a little bit more instead of just like laying it out there, because I felt like you wrote up a wonderful article on the correlation of one in the newsletter. And I just think you should spend some more time.
Okay, fair enough. I thought it was one of the better pieces I've ever written.
Very impressed with the article you wrote in the newsletter.
This concept of correlation of one, we don't really know the origins of it, but it became very popular in the financial crisis.
It's a Forex conversation.
And in the financial crisis, you would have a lot of fund managers talk about, hey, I've been running these strategies for the last decade, for the last whatever, about, doing this, diversifying the portfolio so that you could insulate from volatility, that maybe an area of the market was going down, but the portfolio as a whole was strong. Now, what happened in the financial crisis is that we would see, basically, and you've seen this in other periods of volatility in the past, you would see not just things that had been getting hit, but you would start seeing everything, right? The current market is a very good example of that. Tech's been selling off for weeks, right? But other areas of the markets, silver's been doing great, right? Copper's been doing great. Even oil was trying to, do the Johnny Can, let's go fight to see how we can go. But when true volatility hits, right, it doesn't just hit a few areas, like, for example, tech. It hits everything. The correlation of price movement, right, becomes closer to one, where, and we see this on the heat map, Stocks down 4% in this sector, 5%, 4%. We see the broad-based selling. And so it is important to understand from your own portfolio management perspective that maybe you've had things in the past that had been insulated. Hey, yeah, tech selling off, but I have silver, or I have, to understand what happens when volatility strikes, why it happens, that correlation. Now, what also happens on the other side of that is that certain things that get caught up in the selling, and that selling can last for several trading sessions, several weeks. Make no mistake about it. It's hard to pick an end of when that occurs, right? Things that were relatively strong before tend to bounce back quicker. In 2022, we saw this with Staples constantly, right? 2022, Staples was holding up, but then markets would give out, and then Staples would sell off, but then Staples would bounce back real quickly. My favorite example is gold in COVID. Gold held up for a couple weeks in the COVID crisis, but then when the volatility hit its most, gold just plummeted for 2 weeks. But it then regained all of those losses real quick.
Well, that's because gold was just going down because of margin calls in the equity market. I'll just kind of jump in here really quickly here. Correlation of one basically is an environment where you have extreme fear in the market. And the reason it impacts every asset simultaneously the exact same is because how human behavior responds to fear is the exact same regardless of what asset class you are looking at. And so in times of volatility, where you have the correlation of one, which you talked about, it's based on the extreme fear, and it works the exact same way. You can get to not as much correlation, but in extreme greed moments, you also get a fairly similar correlation. Some will outperform, but you get a correlation environment there, because human nature is what creates price action. We might see it through the identification of candles and trends and patterns, but what creates that candle and trend and pattern is a human being typically, or an algorithm that was programmed by human beings that have some degree of emotional status in them. And so when we get these extreme fearful moments, regardless of what the news is, you will see correlation of one. Everything goes down. We call it a sell first, ask questions later environment. And the most important part of the correlation of one is as we come out of the volatility, what you start to see is quick separation. What are those asset classes that are going to separate?
And it is very quick when it happens.
It depends on the asset class, but the ones that are, like you mentioned, gold in COVID.
Gold's recovering COVID was almost immediate.
Well, if you go back in time a little bit on the gold in COVID, kind of to understand that storyline a little bit, it wasn't like a day thing, Mark. That's not really what we saw. What it was basically we had margin calls in equity after about a week of volatility that forced gold down for a few days. It found a foundation and then traded for the better part of about a week, very similar to the S&P 500. And then you had about 2 months of relative outperformance on gold. And so like in these environments, I think one of the most important questions is, okay, when do you start the buying process, right? Well, you don't do it on a big candle on the downside. Wait for that knife to drop. But then what you will start to see is the market stabilize, but you'll start to see certain asset classes go up as the market stabilizes. And the biggest problem, Childs, in the market, as the market stabilizes, you'll see them continue to go down, whereas you will see the relative outperformers start to go up. And so there's going to be some really strong telltale signs here from a technical perspective over the course of the next 2 weeks, in my estimation, because we will start to see that correlation of one start to dissipate as the volatility dissipates. And that's when you start to say, all right, there's an opportunity in Mag 7. Oh, no. There's an opportunity in utilities. Oh, wait. Do you see what gold's doing or what silver's doing? Yeah. Everything gets hit in correlation of one status. Not everything continues to behave that way. the next couple weeks in
and that's very important for
more.
your decisions in the coming weeks, because there very well could be opportunities in certain asset classes that form a support
even
level,
if there's not an opportunity in the S&P,
even if there's not an opportunity in broad. And so, obviously commodities like silver and gold, Bitcoin, these
I
type of
appreciate
things.
you kind of explaining the correlation, because I
No,
just
I think
like the article was really, really well done.
I think it's a very important concept to understand, not what happened in silver and these other things on Friday, but more importantly, the opportunities to get involved in the coming weeks. We'll obviously outline those on the podcast. Now, I want to finish off the podcast with the scenarios that can unfold here in the market in the coming days. Now, you painted a picture. It's a very accurate one, that the range of the S&P in the short term could be probably anywhere near the 200 weekly moving average, up to much higher, depending on the news flow and catalysts that come out. Now, I'm going to give you some scenarios, right? And not glibly, and we're not playing a game, sell the rip, buy the dip under these scenarios, but I want you to talk about, from a trading investing perspective, and then I'll share my opinions as well on how you will handle that scenario. Now, very likely at some point we are going to get, and I'm going to list them in order of probability down, loosely, right? So we are likely to hear, probably sometime before Sunday, rumors that maybe something is making a deal with one country or making progress, right? You can see a rumor with China on the.
I could care less about that.
Right.
That's for people to debate and yell at each other over politics. This is a bigger conversation than a single country's negotiation.
Now, we know in these conditions, like rumors, and we've seen them on both sides, can have oversized price movement on the futures leading into the open. So if you have a big rally on rumors, that's a sell event generally for you. It is for me.
Depends on the rumor.
Okay, give me an example of a rumor where that would not be.
Like I said, if Vietnam is negotiating with the Trump administration to remove the effective tariff, I think that's going to be a story in general for the types of corporations that have sensitivity to Vietnam. We saw that on Friday, for example, when there were some rumors. Market was dying basically on Friday, and there were some rumors that there was speculation that Vietnam was going to open the door to negotiation with the Trump administration, and the Trump administration was open to that. Well, the market didn't care about that. Not 1 second did the market care about that on Friday, but there were a couple stocks that did, that had a lot of sensitivity. Nike was one of them. Lulu was another one. And so, yeah, I mean, you had some of those stocks that stood out on Friday based on that single story. And so if you see all of a sudden a headline on Tuesday, which I think this is going to drive traders crazy. I really, really do. I think the negotiation with independent countries is going to be a bad choice, because I don't think the market's going to like it. I think it's going to continue to create.
So individual countries
chaos,
has maybe pockets, because like, not, a company like Lululemon that does an insane amount of their business in the manufacturing side of Vietnam.
This is a macro conversation where we're talking black swan risks. A negotiation with Cambodia independently is not going to stop anything. That's a political conversation for people to yell at each other on Twitter. It's not a serious conversation in the financial world. Now, does that lead to other things? Maybe, but on a single country negotiation, no, this is a bigger conversation than that.
What if it's China? What if it's, because that is where.
Well, if it's China, then you have to include South Korea, Japan, and some other countries there as well, because like it depends, Mark. Like on China's going to be different, but like, do you really expect that? I mean, the only thing Trump wants, is TikTok sell.
And that's what I was going to mention, right? Like, like you see some like, rumor that negotiations on TikTok.
I think you better be very cautious about rumors on these trade policies.
I do as well, but you're going to see them, right? I mean, these type of headlines are going to be very prevalent in the thing.
These are serious conversations for serious people. And no, I don't want to discount a single country negotiating, because that's part of this. But a single country negotiating is not putting a floor in the S&P 500. Not with China, not with Vietnam, maybe with Europe. Maybe with Europe, because that would equate to Canada and Mexico, a little bit of improvement there as well. But no, a single nation negotiating will have an impact on the companies that have an impact on that single nation. We saw that on Friday. It would be an industry, single corporation conversation. So if Vietnam signs a trade deal, but China doesn't, that's probably good for Lulu, and that's probably good for Wayfair, and that's probably good for Nike. I'm not sure that's good for the S&P itself.
All right. What about a finalized deal? Let's say at some point in the coming days with an individual country, Great Britain, Australia, New Zealand, not one of the big ones, not Europe as a whole. That's not happening, in my opinion. You're not getting a deal with.
Those are all small tariffs. They're 10%.
And so finalized deal, and a lot of these, Matt, in these conditions can cause sizable.
I don't understand why people would expect a single nation agreeing on a tariff when this was a universally adopted tariff on 187 nations.
Yeah. What I'm trying to do in outlining,
my only point there, when you keep coming back at me with the single nation, to me, it's a much bigger conversation.
But I want to drive that home because investors will see headlines and they will see upward price movement at some point.
Absolutely. But those upward prices without follow through will get,
and that's what I want to
obliterated.
And that is the
bears
main
will
point.
Smoke that stuff.
So that is what I want to do
if the traders retraces on the hypothetical Vietnamese trade agreement when Vietnam doesn't buy anything from us. Oh no, that gets smoked.
But you have to understand, and so you have to understand upward price movement based on the catalyst.
Very aggressive.
Exactly, as will I, right? And that's the thing. If I see upward movement on, hey, us in Great Britain,
fake hypothetical trade,
but even like agreements with Great Britain, an agreement with Great Britain's happening. Like Great Britain doesn't want to fight this. They have low tariffs. They're going to do, and it's going to make headlines, and you can see algorithmic movement up. But
okay, can I give you a scenario on this that would have an impact?
Well,
Elon came out just today and said what he would like to see, and Elon obviously has a lot of influence with the president. What he would like to see is an absolute free trade agreement with all of Europe. All of Europe, free trade across the board, no tariff. Okay. That includes Germany allowing our cars into their country as well, right? So a free trade agreement, which what I would also categorize in that capacity is a fair trade agreement. If Germany's going to allow us to sell some Ford and they can sell some Volkswagen, we're all good. That's a fair trade agreement. Now
that puts a floor into the market and a sizable rally.
Something like that would have a sizable impact.
Yes,
but that when you say Vietnam and that gets all over Twitter and all over everything, to people who don't understand that sounds like a really big deal. But to people who do understand that Vietnam doesn't buy a lot of our goods and they already had an effective zero tariff, and simply by the way of the algorithm, they gave a 46% tariff, which is going to be corrected. That's not an alleviation of any.
I cannot drive home enough, and I got to break out my dad preacher voice. You need to know what headlines to fade and what to trade, right? You have to know,
because there is going to be headline movement,
because you are not, the amount of headlines is going to make your head spin. You need to know that. You need to know what to fade and what to trade. If it is an individual country rumor,
anything that is not settled, like hypothetical speculation. Mark, there is so much nonsense out there in the market right now. In terms of like speculation nonsense. Everybody has an opinion on this one. And rightly so. But I think you got for a floor to actually have legs here. Okay. And I think ultimately that's the question mark, because a lot of the scenarios you're bringing up will be resistance and then get beat up.
And I'm preparing traders to take advantage of that.
The question is, what do we need to see happen probably to put the foundational floor into the basement, right?
I am fading everything.
Everything you've said so far, I'm fading.
Yes. And now let's get into what am I trading, right? A agreement with China, an agreement with Europe, either or. Now that doesn't send you to new highs. I do believe it puts in a floor into the market and it puts into a sizable rally, right? A concrete deal that we
agreement with Europe would signal that we're looking to do that type of agreement across the world.
so either
It would be a massive an agreement with Europe here is, in my estimation, far more important than an agreement with China.
I would disagree, but I'm not going to like quibble over
the China would put a floor into the tech side really aggressively,
and that's why
X7 would lead. Like I'm not cool. I don't want to argue it because I could definitely see your scenario outperforming,
and
especially short term. Like
both of them are fantastic for bulls and terrible for bears, right? Like both of them.
The universal conversation because
and it says that everything is on the table, right? And then Trump can get what he wants. He can get, more products without tariffs.
I think we have another shoe to drop. I'm not meaning the price. I mean, on this tariff conversation, I've never felt Liberation Day was the end result of the trade policy.
Well, how could it be?
I've never felt that. I feel like this is going to be a little bit of a negotiation. And because of how aggressively they went, it just really put on the pressure to get this done sooner than later, in my estimation, because if they don't find resolution to this in the short term, we're going to have some very, very big long-term damage.
Yeah, no. And so, and we can debate that long-term damage, right? I'm, in other times, I'm looking for the headlines this week, right?
I get it, but you have not even sniffed my ultimate concern here. Like, we haven't even talked about it.
What's your ultimate concern?
If there's no alleviation, countries move away from the dollar.
Oh, no, okay. That's a whole podcast, bro.
I get it, but that's the macro concern.
No, and I think like anybody that's listening to us, like if we don't get a deal or get something finalized here, you fade every rally. Like you just do. I'm like that is where I'm at, and it's very hardcore. There will be rallies on the most minor of headlines, and you just look to fade them. You just look to fade them in this environment. And so now deals with China, deals with Europe, huge, put in a floor, probably work your way towards, not all time.
I think that's extremely wishful thinking this week, Bill.
Oh, but laying out the groundwork. Like it's hard to see anything. Is there anything, because I have a couple other scenarios for you, but is there anything this week? Because I don't think the scenarios I'm about to lay out can provide that foundation. There's just not enough time. Is there anything this week you could see?
Well, there's two things happening that I think are extremely important that we haven't touched upon. Right now in Mar-a-Lago, you have tech giants and industrial giants that traveled down to Mar-a-Lago this weekend to sit down with the president to see if they could change his mind on tariffs. A lot of these tech tycoons are
a lot of the bigger names
down big time, and we're talking the Zuckerbergs of the world,
and they're not worried about their share price. They're worried about the longevity of their company and the impact.
I don't know what they're specifically worried about. I know Elon's down $36 billion, and he's talking about free trade agreement with Europe on Twitter today. But they're down a lot. They're
down a lot.
Bezos lost 23 billion last week. Elon lost 36 billion over the last month. They're all down. They're all down big. Welcome to the party. Other people are down too. So there's two things happening right now that I think are a little bit more important than other things, and they're not getting the mentions on in this conversation that I feel they should. Number one is the tech tycoons. They funded that election last year, especially Elon, but there was others. And they
Silicon Valley went to the Republican candidate like never before. Like never before.
100%. So you got that happening over the weekend with some of these tech tycoons and some of the industrial giants coming out down to Mar-a-Lago to see if they can figure out some degree of short-term resolution here. Now we'll have to wait and see on the president's decision there, but that's number one. We could see some alleviation simply because the president changes his mind on how he wants to handle this a little bit. That would not be the first time that President Trump came out with a big offer that was very aggressive, that he tried to get people off their spots so that he can negotiate it. Like that's kind of his thing. Especially getting people off their spot. That's important in the negotiation if you're trying to win it. So I get it, and we'll have to wait and see on.
But can that create a headline coming into this week that is like anything close to resolution.
If all of a sudden on the Sunday morning talk shows we start to see JD Vance on ABC,
Messaging.
start to
Okay,
say,
messaging.
if you start to see that, so those meetings are happening today. If you start to see the message,
So less Peter Navarro, more Scott Bassett. And
you want to talk about Peter Navarro again? Elon came out and said, somebody said something to Elon on Twitter today on Peter Navarro, and Elon said, that's not the positive you think it is. And they were talking about Peter Navarro's economic degree from Harvard. And Elon's like, no, that's not what you think it is. Like, I'm starting to see some of this impact because Peter Navarro was out there trying to pump the tariff plan, right? As he and Ludwig have been doing. And Elon's coming out like, you don't know what you're talking about, Peter Navarro. We're already seeing that, Mark.
and there was a rumor from a
difference between how some in the Trump administration are handling this conversation, how some of the influencers like Elon that are in the Trump administration are handling this, and some of the financial backers. There's disagreement there. And then the second thing I would say,
but I want to stay on this one because I think it's important. But it comes down to the messaging, right? If all of a sudden you start to see a different messaging from the administration, right?
You're already seeing it, Mark. Elon talking about free trade with Europe is a vastly different conversation than anybody in the MAGA world has had on this conversation the last 2 weeks. When was the last time you saw somebody in the Trump administration come out and talk about free trade?
No, it's been a minute.
Well, it just happened.
Okay. But the follow through that, because I'm looking for things that can put in a floor, right?
Like, and again, free trade, fair trade.
So if you think the messaging, because I'm buying this, I'm buying what you're selling here. Like if the like Sunday morning, because there's going to be someone from the administration on a talk show. If it is hardline stance, markets gap, Jim Cramer scenario is a possibility. Let's be honest. Like if they're like, we're just hardlining,
and you're honestly thinking about longer term moving average pockets getting filled.
You're going down to the 200 weekly. The only question is, do you do it on Monday?
Well, I'm just saying, like, in a scenario where you do not have a catalyst event coming over the next few trading sessions, and honestly over the weekend, you could see the pockets fill here. And
all you need is another day like Friday, and you're the 200 weekly. It's not
regardless of the scenario. Yes, I get it. It could be one day. It could be 15. I don't care.
Yeah.
The point is, if you do not get alleviation, we know the market's response.
They're going to the 200
weekly. Don't have to debate it. These pockets are getting filled, and the pockets are down. And I want to be very clear on this. There's no support where the current market is. Like that, there's no support at 505. You got hypothetical support of 495 by 500, and then you have a foundational structural support around the 265 to 275 level. It's 30 points under the current price. And so if we don't see alleviation, regardless of anything, no improvement happening, the president sticks to the plan, and we just see this play out over the next couple months. We'll get some shock events, but we are going lower. Can we both agree there?
1,000%. I don't want there to be any room for misinterpretation. If you do not see a scenario that unfolds where the messaging changes or a deal is made, you're going to the 200 weekly. It's just the path.
And there's a lot of support around there, and
Mark, a ton.
That would be a level that you look at, regardless.
I would start blindly buying. I would start blindly buying at the 200.
Really, really important level, I would say.
I would be shocked. I'd be like, wow, but I would start buying.
Anything that develops before then is going to be a trading conversation. Anything that develops before then, because it's just, there's just no support to anchor against here.
All right.
And so in that scenario, where we get no alleviation, you're going to see the continuation of volatility until you find structured support. And at that point, then it will be a battle between the bulls.
I am really enjoying this conversation because this has practical benefit. And I want to summarize up to this point, but we have a couple other points that I think you have one, I might have one, we might have the same one for all I know. But fade any individual country, certainly fade any rumor, right? But pay closer deal. If messaging changes dramatically,
Well, I think that's how they turned this into a win, is through messaging.
Is if messaging changes dramatically,
And the Trump
markets buy into
administration's
that.
good at messaging. I mean,
That puts in a floor above the 200 weekly, could put in a floor depending on how the messaging flows over this week, and that could put in an immediate floor. And then we would need to see technical confirmation to know that is a floor. But fade any rally that is just hopium and individual small potatoes.
agreed. But if there is some degree of resolution long term, you better. There's going to be a buying opportunity.
Yeah. Now, you said you had another scenario. There's a couple we hadn't mentioned. You
The
mentioned
second scenario is I've been hearing over the last 48 hours or so, a couple Republican congressmen. Pete Sessions was one of them out of Texas. Both very conservative, big time president supporters and whatnot. And I heard some things, Mark, that I just haven't heard from Republican congressmen in a while. Last week, the Senate, with 4 Republicans who crossed over, voted to remove the emergency declaration of the economy from the Trump administration. Remember, in the United States Constitution and in our founding documents, our founding fathers, our entire history of our country, the power of the purse and through all of this lays in the hands of Congress.
It's in the Constitution.
Authority in the United States Constitution. Now, over the last 30 to 40 years, little by little, we have constantly been giving the president a little bit more authority on this side of the equation. But the president does not have the authority to act unilaterally and independently of Congress on tariffs. That is very clear. There is no debate on that, quite frankly. The only way that the president, and I'm not talking about President Trump, I'm saying the president from a civics perspective has the ability to, is if Congress gives him that or her that ability. And what the United States Congress did recently is give President Trump the ability to declare a national emergency on the economy and thus allow national emergency powers, which allows the president to declare a state of emergency and thus do the tariffs. Well, I heard yesterday on Cuomo on News Nation that there was these 2 congressmen, and Cuomo asked Pete Sessions, who is a congressman out of Texas, a question regarding if there was any desire out of the Congress and specifically the Republican caucus to remove the emergency declaration ability for President Trump to declare an emergency declaration and thus strip the president of the emergency declaration powers to declare tariffs. Now, if that question had been asked of any Republican congressman over the last 2 months, you would have been guaranteed to hear the exact answer. And that's what I heard from Pete Sessions. What I heard from Pete Sessions was there is chatter amongst Republicans, especially on the Reagan Republicans in the Republican Party, that this is too broad, and that, quite frankly, this is Pete Sessions, not really me, and I'm paraphrasing a little bit, but there is conversations to modify that, and we saw the Senate act last week on that. If the House follows through and they do in fact modify the emergency declaration to declare an emergency on the economy, that would eliminate the tariffs immediately and force a vote in the House and the Senate on the tariff plan, which would basically back into the policy.
So the mechanics of it is it suspends the tariffs until a vote.
It would suspend the tariffs, and then they would go
market rallies.
They would put that through the legal making process, right? Congress would negotiate. You would have agreement. They would come to an agreement. They would vote on that. It would go to the Senate. The Senate would pass it, go back to the House. House would send it to the president for final signature or veto. That's the process. That's been the process for.
Well, Trump's going to veto that, though.
It depends on what it looks like.
Okay.
Like Republicans have the control. Like, you think Republicans are going to?
So they could craft a clever way.
Yes.
Okay. So I see how. Okay, I haven't thought.
And again, I'm not saying that's going to happen, because like that would be quite shocking to see 4 or 5 Republicans in the House kind of move. But that is a scenario we need to keep our eye on, because again, if these things occur, and I am not saying that like this should occur, this shouldn't occur. I'm seeing this just from a market perspective. But if you start to see either one, alleviation through Europe or China, you start to see like more movement on those bigger countries, because the smaller countries can be negotiated in a heartbeat by Trump. Like the Vietnam deal can be negotiated like that. The Cambodia deal can be done in a
Even
heartbeat.
Australia, New Zealand,
Like,
Great Britain.
all of those, UK, all of those, the 2 big ones are the EU and China.
Yeah, those are the 2 big ones.
And if you see movement on the EU, kind of like what Elon was talking about here today, literally, I took it as positive. Elon talking about free trade and
yeah.
And again, there's a debate between free trade and what the president is proposing. I think the debate should be on free trade versus fair trade, right?
Yeah. No, and even if a deal is not made with China, but it is made in other places, we've seen that. It looks like 2018. We've already went through that. Market puts in a floor, it puts in a floor. The only other scenario that I'll throw out: Treasury markets are under liquidity duress by many metrics. Credit markets are under duress. Jay Powell can say whatever he wants. If those, not the stock market, I don't think Jay Powell gives 2 craps about the stock market.
I'm not kidding. I do not believe Jay Powell can put a bottom into the market.
You know, yeah, I'll believe that if they inject massive liquidity into the system.
Yeah, but that's not a scenario that is even under consideration right now.
It never is until it is. And if those markets crack, he will.
Oh,
I believe that. Like
when I see the headline of the plunge protection team, yeah, start buying.
So,
yes.
So be aware of that headline, right? Like that's a headline.
The PPP plunge or the PPT plunge protection team. You see those bad boys and girls going out there,
because 2018. You know what happened in 2018.
The only reason the plunge protection team exists, Mark, is to put a floor into the market. They literally were created after the.
Yeah, in 2018, we had a horrific sell-off. Came down to the 200 weekly. They called the plunge protection team. Sell-off was over. Monster rally happened the next
10% in like a week.
It is very important this week, and I'm going to give these my final thoughts. Then we'll wrap up, Matt. I've enjoyed this. I think this is a very important podcast. I want to summarize my thoughts on the price action, right? Because then we can debate patterns and this and that in the coming weeks, right? We'll have time to do that. Is to understand the headlines in the price action. For me, I think we did a very good job of describing what happened. And then if we see headlines that cause rallies but not resolution, right? So you see a rally.
Way to think of it. Rally but not resolution.
But not resolution. So if I see a headline that causes a rally but not resolution, I will add bearish exposure. I will reduce bullish exposure. If I see headlines
covered calls on longer term asset classes, entering a couple bear shorts. Yep. 100%.
So if I see rallies without
resolution, that's exactly the game plan. I like it.
On that. Now, if I see substantial headlines, and I think you did great, concrete change of messaging. That's one I hadn't thought about to the podcast. Right. But if they come out and
specifically, I'm talking over the next few days, just based on the meetings that are inherently happening at Mar-a-Lago right now.
Yeah. And if I see that, I'm not going to go out and buy on those headlines, but I will be, I will
be starting to look for a floor.
Yes, I will be. And that's exactly it. I'll start looking for a floor, because
I'll be like, let's see this intraday turnaround story.
Yeah. I'll start to look for a floor. And then if we see actual resolution, which is not likely to happen this week, but if we see those type of things progress, specifically with Europe or China or the plunge protection team, but that probably doesn't happen to lower levels.
The 3 scenarios where I think we can create a floor before we get to 465. Okay, because again, I think if we see the continuation of the volatility and the downward pressure in price, I think all of that's fun and games until 465, 470, because there's some
those things are
Well, Mark, we still have overvalued situation. As you go lower, that you start getting into a little bit of a different conversation. The 200 weekly is at 466. The 50 monthly is at 465. The top of the 2022 before the bear market was at 470. So like there is a lot of data between.
No, I mean,
465
if
and
we
470.
come, Matt, I'll just be
Lots of
frank. If we come down to 465, 470, 475, I'm going to start putting money to work for two
Yeah,
reasons.
there'll be
One,
deep value
because just from an investing, not from a trading perspective, I'll just be like,
But
because of those support levels and because a move down there likely speeds up the rest of the process.
100%, 100%. So that's kind of a target zone longer term, I would say. Longer term meaning it's a major zone. It could be quick, like depending on the scenarios here. But in the scenarios where one, you see some degree of change in messaging towards some of the tariffs in general, based on the Mar-a-Lago conversations that is happening right now. You see a change to Europe or Canada. Yes, absolutely. But I also think just in the political realm, keep an eye on the Republican Congress this week. Keep an eye on some of those Republican congressmen, because if the president is going to, stick to his position, I can just tell you what Pete Sessions in that interview yesterday said, if we lose the revenue coming from Mexico to the state of Texas, there's going to be a tremendous amount of problems to be had. And so there's things happening right now behind the scenes that you might be able to start seeing this. And again, we don't like to talk about politics on the Trading Justice podcast or at Tackle Trading. We respect everybody, love everybody. But if you do start to see some of those Republican congressmen kind of starting to shift a little bit, Mark, they already have the votes in the Senate to remove the declaration. And so that's going to be a very interesting secondary part of the puzzle. The most likely scenario is Trump comes off the aggressiveness a little bit, because this was outlandishly aggressive.
Outlandishly aggressive, even by Trump standards.
Even by Trump standards. I think he got some bad advice, honestly.
Yeah, no, and you're already seeing, like, there was a Fox News reporter on Scott Bassett that basically from Fox, and this is, I found it interesting because it came from Fox, because Fox has been very, don't say a word. Like Trump could
lately.
But Fox reporter coming out saying that Scott Bassett is, trying to convince.
I heard that story too, that Bassett was trying to talk him down off the aggressiveness. And so there's a lot that could happen in the next 20.
There's a lot of ways for Trump.
By the time some people listen to this podcast, there may be resolution on some of this. Because again, like the president, he sees this as a negotiation. It's a live negotiation.
It's not boring.
It's not boring. It is anything but boring. But
all right, brother. Listen. Those technical patterns, those support levels, man. Talk about Master Trader. Closes out.
Yeah, Master Trader, in the scenarios where we don't get a clean build off that 465, 470, we're going to have to see what's called a support build by the marketplace. And I'm going to teach you how to identify that in Master Trader this week. So come join me Monday and Tuesday, 6 p.m. Eastern Standard Time. Hit the link in the description below, and you can come hang out with me in Master Trader this week and become a pro member of Tackle Trading. And while you're there, Tackle Trading, don't sleep on the greatest newsletter in the market today. It's got 3 videos in it, the market skyline video to really kind of help you understand the entire technical picture. You scroll down a little bit, you can get a whole bunch of articles. Article number 2 this week was Beyond Tariffs, the Real Trade War Has Begun. Talked specifically about everything we talked about in general in the podcast here today. Then we do the sector rankings video and the sector rankings update, where yes, everything got spanked from a rankings perspective this week. Talked about the logic, market Mark. I thought you had a wonderful write-ups in your write-ups, and the 2 write-ups you do in the newsletter every single week are the economic landscape write-up, where you really focused on Jay Powell, and then on the global markets piece, I just felt the correlation of one article was absolutely fantastic.
I say this with true belief. I believe out of all of the newsletters and content, you will not in the world, not out of JP Morgan, not out of Goldman Sachs, get anywhere, give you a better understanding of what the hell is going on.
Because we like to
now.
teach, not just tell. You were talking about the correlation of one status, Mark. Spiders, gold, staples, all pandemic, all vastly different asset classes, do not have that much correlation in normal times. In the pandemic, market went down for about 3 weeks, just straight down. Gold went down for about a week and a half after about a week of the market doing that. Staples, correlation of 1, started separating a little bit more. And so it was such a wonderful article. I hope our entire pro member community truly has a deep understanding of the environment, what to expect. And that's really about the Tackle Trading newsletter. And so if you're looking for, you know, an awesome newsletter, well, guys, in the pro membership, not only do you get the newsletter and the traders report and 4 traders lounges and 2 coaches shows and a whole bunch of education, you also get access to Master Trader, and you can do that at Tackle Trading for a free trial. So come check it out, come hang out Master Trader, and let's have some fun this week.
Listen, everyone have a fantastic week. Check out Tackle today for updated analysis and on this very important understanding, messaging, rally, and resolution. Matt will update every day on Tackle Trading YouTube channel. But have a great week, everyone.
Later, team.